how am I protected when a crash comes?
Do you see a downturn or a crash coming anytime in the next 2 years?
When you look at if a market crash is going to come, you should revise the question and think, how am I protected when a crash comes? Because there's always going to be a downturn. Everyone knows the market goes in cycles. So it's less about if and when it will come. It's more about it is going to come sometime. I don't know when. I have no clue. Perhaps if someone does, then you should be interviewing them. But what I do for our portfolio is I protect it to mitigate as much risk as possible. And we do that in the following 3 ways. One is we buy for cash flow, not appreciation. When you buy for cash flow and not appreciation, then you're making money. And if and when the market softens or there's a crash, then you're still able to ride that out because you're still making money. Now, certainly you could charge less. You might have to charge less in rent in order to keep your tenant in there. And if that's the case, then the second thing we do to protect ourselves to mitigate the risk, and by the way, we're not going to escape the market crash, but we can protect ourselves and mitigate risk. The second thing we do is we have an operating budget. And that operating budget will be there to help us float the property if the market softens and rents plummet, as well as at the same time a couple boilers go out and we have to replace $8,000 boilers, a couple of them at a time. It's important to have an operating budget. So 1, buy for cash flow, not appreciation. 2, have a healthy operating budget, and roughly 5 to 10% of your initial capital you brought to the deal, that should be allocated towards your operating budget. So there's a number for you. And then the third is make sure you have conservative long-term financing on the property. That's where people can get burned in a market correction. You're forced to sell and the market's really low. Well, now what do? You might try and refinance or refinance, but if you refinance when the market's not doing too well, interest rates are probably high and you're not going to get a very good loan. Think about trying to refinance in 2008. Mm-hmm. You get like 6.5% interest rate on your loan. Not very favorable. So you'll want to have a loan with a term that is 7 to 10 years at least. All of our projects now are at least 7-year terms. We have a 5-year projection for when we exit, and then at minimum we have 2 more years after that to figure things out if the market just takes a weird turn. So to summarize, I have no clue if a market correction is going to happen anytime soon, but I know something will happen sometime because that's just what markets do. Therefore, I don't try and time the market. Instead, I buy for cash flow, not appreciation. I have an operating budget that is healthy to ride out any unexpected storm. And lastly, have long-term financing so we're not caught in the middle of the storm and having to sell our property.